is the term liquidity. No, the bank doesn't really care how much water you drink per day. What we really want to know is liquidity is defined as the availability of liquid assets to either a company or the guarantor, you as an individual. The answer to this question is usually, how much liquidity do I need, is the question that I get asked all the time. And really, it depends on bank to bank. Some will say it's a certain percentage of your net worth. Some will say a percent of the dollar amount of the project. It really depends on the bank. So make sure to ask those questions from your banker. As a borrower, I would assume that you would want to make sure that you have enough cash in the case of an unexpected emergency, issue, vacancy, whatever the case may be. At the end of the day, banks want to also make sure that you won't be coming back to us pretty much nickeling and diming us and asking, oh, I need some more money for this. I need some more money for this. We want to make sure that you've thought about this project and that you've prepared yourself for some of that. And again, you have to think about commercial buildings are really illiquid investments. So investors really should carefully consider the risk tolerance and time horizon before committing to a commercial property. And if you have invested funds or going to be needed in at least 5 years, you probably should not be using those funds. Again, when we're talking about liquidity, we're talking about cash at a bank, we're talking about stocks and bonds that are not IRAs, cash value of life insurance that you can actually pull out. If I put a gun to your head and said, give me all of your cash, what could you generate in 24 hours is the answer to liquidity.